My name is Barb Munn, and I am a member of this church, which is the Sierra Foothills Unitarian Universalists. I am a founding member of our Mission Earth team and co-chair of the Social Justice Committee. I also serve as SFUU's rep to Placer Earth Care Action, which is where many of you heard about this from, so I'm really glad you came. This is an interfaith group that believes we have a moral and spiritual obligation to promote effective and just action on climate change. One such goal is to consider whether our money is working for or against the social and environmental issues that we value. And so that's what we're going to talk about today. In a former life, I was a geology professor down at Sac State, and so I'm really deeply interested in the way the Earth works. And however, having a PhD in geology does not make me an expert in money matters, so just let you know. But it does make me pretty good at researching. So I'm really good at doing that and also putting together little presentations like I would for a class. So just consider me a regular person who's really concerned about how to go about matching my investing to my values. And I'm sure all of you have the same questions. So I am not a financial advisor. So any financial decisions that you make are totally your own. This is just to give you some information about what I found out. So what I'm going to do today is provide you with some tools that help you uncover information about your investments so that you can make your own decisions. So I've created a companion website for this. I'm going to hand out this little thing here, and then I'm going to share the screen for everyone else. So what issues drive you? Do you make thoughtful choices when you go out shopping to spend your money? Some of us are trying to avoid plastic. Others of us are making sure we buy local, and there's lots of other things that we do. Do you protest for things that you believe in? I know that many of you do in this room. Do you write letters or emails? Do you give voice to the things that matter to you? So while you're doing all of that, do you ever wonder what your life savings is doing? What's it being used for? And that's what I'm going to talk today. I've really come to understand that what we do with our money matters. And in this presentation, I'm going to focus mostly on investments. So the majority of the presentation will be about investments, but I'm also going to talk about banking and credit cards.
Everybody seems to be talking about responsible investing these days. With growing concerns over climate change, pollution, and human rights violations, it's no surprise that so many people are interested in putting their investments to work for the greater good as well as their own. In fact, between 2014 and 2016, global sustainable investment assets grew by 25%, reaching a total of $23 trillion globally. But all this talk about responsible investing or SRI or ESG is confusing, and it's easy to get overwhelmed by the labels and the vast range of responsible investment options out there. So, instead of trying to make sense out of all these acronyms, it may be helpful to take a step back and reflect on what matters most to you. Maybe you just want to invest in assets that conform to your personal norms and convictions. You may want to consider a strategy that excludes companies involved in controversial activities. Although the many responsible investing approaches differ according to asset class, performance objective, or societal outcome, they all have one thing in common. They focus on creating long-term value. Because how we invest today is how we live tomorrow.
I really love this graph. I'm a graph person. Being a scientist, I love graphs, and I like the idea of getting more value for my money, getting lots of money because you put stuff in. That's what we want to have for our retirement. But at the same time, we want to make sure that we have a societal value. So I think probably the best advice that was given on this video was to think about what matters to you most, because there are many, many issues, and what we invest in can be good for one and not good for the other. And so we really have to decide what is the primary thing that we really think is the most important to look at. So to help you do that, I found this great website. I don't know if you've heard of it. It's called As You Sow. When you go to As You Sow, you'll see this picture here that gives you, because we're very visually oriented, will give you the different types of things that they search on. This is completely nonprofit, and it draws on many, many different organizations who are interested in each of these different things. And it puts it all together in one site so you can do a search on it. And I would stay here to do your search, but if you're interested in only one thing, the good thing about going to the one thing, so for example, I'm very interested in making sure my investments are fossil free. If you go to that one thing, then you can actually, they'll have a thing here where you can put in your fund by name or ticker or manager. But before you do that, you might want to just check the top rated funds on that one. So I did that. I went and pushed the button so I could get my top rated funds. And it gives you them, and they grade them from A to F. So the darker, the redder it becomes, the worse it's going to be in that area. And they give you a bunch of other information about it, like, you know, what percentage is invested in the Clean 200, which are the top 200 companies that are leading the way with solutions to a transition to clean energy. They tell you how much money is in it because these funds are made up of lots of investments in lots of different companies, and they proportionalize them, how much you have of in the different mutual funds or ETFs or whatever the kind of fund you're using. And so they also give you the category, which again, I'm a geologist, so I don't know too much about what all that is, but if you have a financial advisor, they can tell you that kind of thing. So you can just do a Google search. It's amazing what you can find when you do a Google search. So I'm pretty good about that. That's all A's. So maybe I should look into one of these. Over here on the left, those will give you the name of the asset manager, which was Impacts, Amana, Parnassus. Those are asset managers, and then the name of what their fund is called. They have lots of different funds that they will offer up. And so if you click on any one of these, it'll give you more information. I like to look at the performance because we want to know how well is it doing. We want to make money, right? So you can click on performance, and what it does is it compares it to an index. And if you know, like the S&P 500 or the Dow Industrial, Jones Industrial, those are indexes. And then these asset managers will go and they'll create a fund that matches the index. The index actually is sort of a gauge of how the stock market is doing. And so if they create an index fund, they're following what's happening in the stock market. And so it's, you know, those would probably be good ones to do because they're the top 500 companies and they're doing well solidly on the profit end of things. And so you can do that, and you can see, you can look at the 1 year, 3 year, 5 year, 10 year, 15 year, over 20 years. This one's been around a while, the second one down. It's over 20 years is doing 13% better than the index fund. Over 1 year, it's not doing so well, and that's because this past year we've had an issue over in the Ukraine, which has driven the stocks for oil companies way up. And so other things have gone down in respect to that. So if you see a drop in socially responsible ones that are fossil free, it's because of what is going on in the Ukraine, and won't be, hopefully we'll be that will be over soon, and we can get back to what would be, quote, what we would think of as being normal. So you get an idea of what they're doing that way with performance. Then you can click the sustainable one, and the sustainability button, when you click that, it'll take you to these same exact funds, and then it'll tell you what it did in all the other things besides fossil free. So you go and do that. It's like, oh my God, look at all those F's and D's, and who knows what this little blue thing is. So you can see that if you're really interested in looking at all the social things, you need to make this comparison to look at what we call the report card for it. So I was wondering about this. So all you have to do is click on it and it'll tell you what things are. So if you click on that blue shield, that's in the deforestation grade there. And what that is, it means that it's not doing so good, but the asset manager is involved in engaging with those companies to make them better at it. And so the companies for deforestation that we're concerned with are mostly the agribusiness, because they are cutting down forests in order to plant palm trees or for palm oil or whatever. Also the bankers and lenders that are lending money to support them, and the companies that use their products. So all of those three kinds of companies could give a bad deforestation grade to a fund. And what they do is these asset managers will engage them through shareholder resolutions, because the asset managers own shares in these companies, and that gives them a vote. And if they have that ability to vote, they also have the ability to put forth shareholder resolutions, which could encourage sustainable environmental practices to be better by making these resolutions and getting other people to vote for it. And they can influence the companies by doing that. And you can also influence the composition of the board because they have the ability to vote, because these are all publicly traded. And so shareholders are the ones that they're beholden to. And so if the shareholders say, I want this, and they vote for it, then they have to do it because they're publicly traded. So that's what that little blue shield does. So I'm going to go back to the main As You Sow site. And when you go there and you scroll down, you'll find this little box here. And in the box, you can search your funds by name, the ticker number, which is like usually a 4 to 6 capital letters, or by the manager, which would be, Parnassus or BlackRock or whoever is managing your fund. And then you can choose it. And I'm put my little picture there to remind you. So what I did is about 6 years ago, I got concerned about this. And so I asked my financial advisor, who happens to be my brother, could you put me in some socially responsible funds? He goes, well, what do you want? I'm like, well, I'm not exactly sure. Just put me in something that you think is good. What are you in? Blah, 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 because I went on the internet and I was like trying to figure out what is socially responsible investing? What is this SRI? What are all these things? What are they? And I just got like totally confused about it. And I was working at the same time. I wasn't retired like I am now with more time. And so I just said, put it in something. So he put me in a couple different funds. And so I did a search on one of those funds to see what it was really like. And at first it came up with this picture here that says fossil fuel companies are fueling the climate crisis. And I thought, oh no, this isn't a good sign. And then you scroll down a little bit and it has this sign about your investments. And so we're getting a C. This fund has a C in fossil fuel investments. It's got about 3% of its assets are flagged for this. And then if you look over on the right-hand side, you can see that it'll give you what it is that the holdings are involved in: coal, oil, gas, tar sands, whatever is in there. It'll tell you the companies, and you can click the see all to see all of them. It'll tell you how many holdings. There's 21 holdings, etc. And so I was like, oh no, here I am out protesting with Shirley and Mike, divest from fossil fuels. And I have a fund, and I probably have other funds too. This is the one I looked at more closely, and it is invested in fossil fuels. So I'm going to have to make a change. You can also go up here and look at banks and insurers, because we all know that banks are also funding the expansion of fossil fuels through their loans to various companies and projects. And that got a total F on there. And you can click on and see what their methodology is. And you can look over here. Oh, look at all these banks that are giving loans to businesses and projects that involve the fossil fuel industry. So this information most likely comes from the Banking on Climate Chaos report that comes out. This is the one that just came out in 2022. It's created by a combination of many groups, many nonprofit groups, Rainforest Action Network, Sierra Club, et cetera, all of these on there. And I'm just going to read an excerpt from this report. Fossil fuel financing from the world's 60 largest banks has reached 4.6 trillion in the 6 years since the adoption of the Paris Agreement. This report examines commercial and investment banking financing for the fossil fuel industry, aggregating their leading roles in lending and underwriting debt and equity issuances, and finds that even in a year where net zero commitments are all the rage, the financial sector continued its business as usual driving of climate chaos. And what they're talking about, this net zero, is they all signed this net zero alliance of banks. And their idea is, well, by 2050, we'll be net zero. And that is not soon enough. And meanwhile, they continue, instead of slowing down, which you would think they would do if they're trying to do a transition, they are continue to finance, even expand their financing of some of these industries. So if we want to reduce the amount of carbon in the atmosphere, we need to scale back on our fossil fuels and scale up on the clean energy things. And then it goes on to say, overall, fossil fuel financing remains dominated by 4 US banks: JP Morgan Chase, Citi, Wells Fargo, and Bank of America, who together account for 1/4 of all fossil fuel financing identified over the last 6 years. And this is in the world, not just here in America, but in the world. They are the top 4, quote unquote, dirty banks in the world. So what do we have here? JP Morgan Chase. They, in the last 6 years, $382 billion they poured into the fossil fuel industry. Citigroup, $285 billion. Wells Fargo, $272 billion. And this is in the 6-year period since the Paris Accord was signed. And going up to 2021, this is a 22 report, so that's the latest information. And those are the top 4. Goldman Sachs is 14th on the list with $119 billion since the Paris Accords were signed. So I guess I got to get out of this fund since that is a main thing for me. So if you go to Stop the Money Pipeline, this is a group, an activist group that's been working on these issues. And here's their little placard about Bank of America. In 2021, the Bank of America committed to net zero financing emissions by 2050. But in order to truly walk the walk, Bank of America needs to stop financing new fossil fuel projects like the Line 3, which is a pipeline from the Canadian tar sands down through northern Minnesota, and the Mountain Valley pipeline that carry natural gas. Is going to carry that from West Virginia to through Northern Virginia, crossing the Appalachian Trail and hundreds of streams and wetlands. They're not just stopping with the banks. So here's our top 4 banks, but they're also looking at asset managers and insurance ones, the top 3 asset managers that are involved in these funding these things, and insurance companies that are also underwriting the projects. And there's even a climate chaos report every year for the asset managers. So here we are back in fossil fuels. So I wonder, how about the insurance? I get a B in that for that one. So I'm feeling a little bit better on that. So I'm going back to that page where we were on initially, where I put in my number, my ticker, and I look down. And if you scroll down, you'll get the report card that will give everything, not just the fossil fuels. And so my grade for this fund is the C in fossil fuels, and then all these other ones. Doing pretty good in these other things, not so good in prison industrial complex. If you click on any one of those, it'll tell you what it is about your fund that they rate it this way. And so I'm going to click on prison industrial complex because that's a C. I want to know what's going on there. And when you do that, you can see that this is a much larger portion of it. So 21% of the assets are flagged for this particular one. And these are where they're doing things that involve mass incarceration, immigrant detention and surveillance, military occupation, or the border industry. Those are the things they're looking at. And you can click to see more, to see the whole list. There's at least 32 holdings in there, or you can click on any one of these. So I'm going to click on Microsoft. It's right there at the top, and see what is involved there. And it'll come up and tell you what's what with that particular company. And so it's one of the world's largest IT companies, provides tools and infrastructure used by the US government to survey immigrant communities and to manage prisons. And so that's where that comes from. So you get a lot of information by clicking on these things and looking at the companies. So I'll go back to that initial page, my report card, and I keep scrolling down because the bottom line is I want to have performance. I want to be able to retire and keep my retirement in comfort. So what it does in that, it takes your fund and it's compared to a benchmark, which is the index, an index fund that is relatively about the same kind of index fund. If you don't like that one, you can actually change the benchmark and see how it compares to something else. So I can see I clicked the 10 years and it's about 1% less over 10 years than the index. So, but if you compare this fund, which is the socially responsible one that my brother put me in, to the benchmark, it's a lot better. So I know people keep talking, they're greenwashing our funds, they're greenwashing, the socially responsible is greenwash. It is better than putting it in a straight index fund. So they're trying to do this, which I think is good. This is a graph that's showing over time how the gold investment, which is socially responsible, compares to an comparable index fund. So in this particular one, it actually does better almost the whole way through. So it is possible to do socially responsible, to have profit happen, but also people and planet paying attention to both of those too as well. And just so you could see what these two are, this is the gold one, the socially responsible, that's its report card. I put it in, and that's the index fund. So once again, if you are in a socially responsible fund right now, it's probably better than the index fund that it could have been in. So now it's just up to you to fine tune, to figure out, what is going to be the main thing that I'm most concerned about. This is another graph. It looks like the last one, but it's different. This is about the growth in the industry of socially responsible investing. So there wasn't much going on early back in the 90s, but it has grown. A lot more people are investing in socially responsible funds. It's something that people are asking about. They want to know. Because you're here today, I know that you're interested in it. And there's been studies that show that it's been driven by millennials and women. ESG, have you heard of ESG? That's the word that they're using now. So SRI is out, ESG is in. And I thought, well, where did this ESG come from? And I went and looked it up last night. And in 2006, there was a report. It was called the Principles for Responsible Investing report, the PRI report. The UN did this. The UN put out this report. And so we need to start thinking about looking at environmental, social, and governance. Those are the three things that E and S and G relate to. And since then, it's been further developed by the World Economic Forum and the International Business Council. So it's not something that's just being made up by your financial advisor or by these asset managers. It's something, a group who are interested in making better business, because it's a risk not to look at these issues. It's a risk for the business not to look at these issues. And so that's why it's come into more prominence.
Throughout all the craziness of the past couple of years, one great thing that has blossomed is consumers and companies alike rallying to be more socially responsible. This has led to a boom in sustainable investing, and the term ESG has been popping up everywhere, from investment platforms to boardrooms. But what exactly does it mean? And how can you take advantage of it? Hey, I'm Nikita, and I'm not a financial advisor, and this is not personalized financial advice. Look, guys, it's 2022. Companies aren't getting away with some of the sketchy things that they used to, and consumers want to invest in providers that care. And we're ready to put our money where our hearts are. 76% of consumers say they will stop buying from companies that mistreat their employees, environment, or communities. And to their credit, many providers are taking a good look at how they handle their people, their company, and the planet. ESG is a scoring system for those companies based on non-financial criteria. ESG stands for environmental, social, and governance, and helps measure the sustainability of an investment or company. So ESG will look at environmental things like emissions, deforestation, and energy. It will look at social factors like employee diversity, human rights, and data security. And it will factor in governance issues like internal corruption, lawsuits, and board diversity. After factoring in all these different elements, rating agencies such as MSCI assign the ESG score as a way of judging an investment's financial returns and its overall impact. Basically, a potential investment's ESG score measures the sustainability of the investment in those three specific categories. You may have also heard the terms socially responsible investing, SRI, or corporate social responsibility, CSR. And while they all take social responsibilities into consideration, they are each a little bit different. SRI is a general term for an investing strategy that aims to generate both social change and financial returns for an investor. This might include investing in a company that makes a positive sustainability impact, like a solar company, and completely excluding companies that are making a negative impact. CSR is a corporate strategy of companies to improve their public opinion by positively impacting their local community or environment. You may sometimes hear SRI, social investing, and ethical investing used sort of interchangeably, but none have the strict criteria that ESG has. The main benefit of ESG investments is pretty obvious. You'd be investing in companies that are dedicated to creating positive change. But aside from just feeling better about investing your money with a company that actually cares, there are a lot of other great benefits in sustainable investing. If you really think about the core of what ESG is, it sort of pushes companies to govern themselves better. They're treating their employees better, they're mitigating potential lawsuits and issues through improved processes, and they're minimizing their footprint on the planet. So by extension, These sorts of positive increases can lead to lower risks for their investors and lead to the potential of higher returns in the long run. In fact, several studies have shown that sustainable investments have yielded higher returns over time and consistently show a lower downside risk than traditional funds. Now, let's talk about the best part, which is how you can take advantage of ESG investing. Just remember, diversity in your investments is always important, even in sustainable investments. A couple of popular options are ESG stocks and ESG mutual funds, both of which can be bought and sold just as you would any other stock or mutual fund. But ESG does require a bit more research than traditional stocks and mutual funds because you'll want to check out a company's impact report or other criteria to make sure the company's initiatives align with your own personal values. Sifting through paperwork every year to figure out who is and who isn't fulfilling their forward-thinking promises can be a lot, but you have a couple of options for choosing ESG investments. You can either do it yourself, hire an ESG financial advisor, or get a robo-advisor. If you go the DIY route, you'll need to do a lot of your own research. Luckily, there are a ton of useful resources out there. Consider starting with a best of list published by a credible outlet that lists the current top ESG investments. This can be a good springboard into your research and help you choose solid ESG investments for your portfolio. Now, if the idea of tackling it alone feels overwhelming or confusing, or you just don't want to, you might want to consider an ESG financial advisor. They can help create a strategy for your financial goals while implementing your ESG investment goals. If you already have a financial advisor, they should be able to help with ESG investing. And your final option for choosing ESG investments is a robo-advisor. I like to think of these as sort of like a hybrid mix between a financial advisor and the DIY route. They're more economical than financial advisors, but pricier than doing it yourself. Robo-advisors are automated advisors that will build an investment strategy based on the criteria and goals you provide using artificial intelligence. The portfolio will be built based upon your risk tolerance and goals, and you can opt in or out of elements as you see fit. Once you decide how you want to invest, your next step would be to decide which companies align most closely to your own sustainability values, while still offering a solid investment opportunity. And then start building your portfolio. Ultimately, the goal is to have a well-balanced portfolio that makes sense for you and your goals. And where you decide to invest your money is your own personal decision. As of 2021, only about 21% of investors were investing in ESG, even though there were more than twice as many that were interested. The main reason they haven't taken the plunge is that they don't know enough about ESG. So hopefully this video helped you understand a little more so you can make informed decisions about what is best for you. The cool thing about ESG investing is that it offers a way for you to ensure your money goes to places that matter and can make a positive impact. If you want to ensure your money helps foster change and progress, ESG investing can help you do that.
So E for environmental, S for social, and G for governance. And this is from the Foundation for Sustainable and Responsible Investing, which I don't know how they get SIF out of that. That's what it is. And as I said before, this has been developed since 2006, and more criteria have slowly been added to the ESG. I think they're up to 22 right now, different ones. And these are different things that would be in the environmental, corporate governance, and also social. And again, a lot of this has to do with risk. If they don't pay attention to some of these things, something bad could happen to the business. I did a search for impact report, and I think what she meant was the ESG report, because if I do company and impact report, I don't find anything on Google or whatever, DuckDuckGo, whatever search engine you use. And so do a search name on the company name and the ESG report if you want to know about a particular company. And you can also, if they don't have an ESG report, because not all of them do, but if they don't have one, you can find an awful lot about them through their 10K report, because these companies are publicly traded. Every year they have to submit what's called a 10K annual report to the SEC, to the Security and Exchange Commission. And if you look at that report, they'll talk about a summary of the company, but there'll often be stuff in there about their attitudes and philosophy related to some of the issues that you might be interested in. So it's worth a look at that if you can't find anything else about a company. Hopefully you can go to As You Sow and your fund will be in there. But if it's not, then you may have to go and look at the top 10 holdings and figure out what they're doing. Tom, for As You Sow, that is completely independent. It is not coming from the companies. So his question was, what's the level of greenwashing that comes from As You Sow? All of them are independent nonprofit places that they draw on to get the information from. So I feel pretty confident in those ones, much more so than the glossy folders you get on the perspective from the company itself. Good question, Tom. My next slide is beware of greenwashing. So beware of greenwashing. So you got to do your homework. If you're not sure, you got to do your homework. Go to As You Sow. And if that's not there, then get the prospectus. You can ask your financial advisor, or you can simply type in fund name prospectus and you can get the prospectus, and that'll tell you things like its financial performance against an index. It'll tell you what its holdings are. And so you can look at the top 10 holdings and see what they're doing. You can put information about them, look for their ESG report. And again, the ESG has all these criteria, and hopefully they're actually following what they say on ESG. So it's better than having nothing. The fact that they do, ESG says that they value that, and they're going to use that as a criteria when they make their decisions. So that the fact that they make a report and are actually talking about it is a good thing. So, and if it's not in the fund is not in As You Sow, then get the prospectus and look at your top 10 holdings, because that's where most of the money is going. And you're not going to want to look at the hundreds and hundreds of ones that are in there. It's just overwhelming to even think of that. Try to get their ESG reports. If they don't have an ESG report, then get their 10K and see what they have to say about that. Learn about your funds. So like I said, get a prospectus. You can actually go to the SEC. It's not that much fun to go there, but you can go there and put your fund name in. You could do the fund, or you can do a company, and you'll get the monthly portfolio investment reports, summary prospectus, share. It's all public because these are publicly traded companies. They have to put this out for you to see. The definitive data is stuff that they have to put out before a shareholders meeting, so the shareholders are informed when they make their decisions. It's kind of interesting sometimes. And these are the things that these nonprofits go and look at to come up to their conclusions about what's going on in their companies. You can also look at their shareholder resolutions. That gives you an idea of what the shareholders are wanting from the company, and you can see what they're voting on and how they're voting. And there are places where you can actually go and put in your fund and see. That's called proxy preview. All of these are on those pages, the link, that page that I created to go with this presentation. So you just go there, everything's there. Other sites to search, for funds, you can look at heart rating. Let's see, what is that one? Heart rating looks at ESG, but it also looks at shareholder advocacy, what they're doing with the shareholders, and it looks at community investing. So it looks at all those things, then it gives you little hearts. This is you can see it's an investment company, so you can just know that that's what their deal is, to look for investments like that, but they're not. They are a for-profit business, so be aware of that. The AFC is the American Friends Service Committee. They're the ones who are very interested in the prison industrial complex, and that's where their information comes from for As You Sow. But you can put a fund in there if that's all you're interested in. You can put a fund in there, and they'll give you information. There are certain searching tools for ESG on there as well. If it's for companies, there's one called Just Capital, and Just Capital looks at fair pay, equal treatment for all workers, good jobs, community involvement, and commitment to a healthy planet. And so they're a nonprofit, Just Capital, and that's looking at different companies. So there's a lot of places to look. The only place I saw where you can actually get an ESG rating is Sustainalytics, which is part of Morningstar. Again, that's a lot of investment companies will hire Morningstar to analyze their funds and give some information about it. So that's not a nonprofit, but it is a place where you can see an ESG rating on there, and they give you information. So all of those links are on the website that I created just for you. So investments, what you got to think about, what matters most to you. You got to get an ESG fund recommendations from somehow from your financial advisor or whatever. And then you need to look at them for sure to see if it's actually doing what you want it to do. You need to investigate. You need to make sure that it's following what you want, because as I mentioned before, they will be better than an index fund, but they may not be exactly what you want. So you need to do that follow-up with it. So I hope this was helpful. So I have a little bit on banking and credit cards. It won't take very long if you're willing to stay. Banks and our money. Banks use our money to make loans, and they make loans to businesses and projects. They make loans for people to buy their houses, for people to get cars, and they make loans to other customers. They could be loaning to business or projects that are socially harmful, like tobacco companies or firearms manufacturers. They could be loaning to things that are environmentally harmful, like businesses that lead to deforestation, or, as we mentioned, the fossil fuel projects, oil pipelines, or they could be lending to businesses that promote unjust labor practices. And we don't know that because we're just putting our money in there and asking them to hold it for us because it's convenient to have it there. And I will say the ESG report does not take into account any loans that are being made. And so the ESG report will not have that in it. So if you need to keep that in mind when you look at ESG, is they're talking about the business itself, not what it's doing with its money out in the loaning lands. I mentioned this report, and here is a graph from it. It's the Dirty Dozen, the worst banks since the Paris Agreement. It's always nice to see something visual. So there's JP Morgan Chase at the very top, Bank of America. BNP Paribas owns Bank of the West. They've actually, which is here in Auburn, and they've actually sold that to Bank of Montreal, which is on this list, but maybe 2 or 3 more down. MUFG is Union Bank here in the Auburn area. So we have several banks here in Auburn that sponsor fossil fuels. This information also can be found on something called Fossil Banks. You can put your bank name in, and it actually only has those 60, so smaller banks won't be in there. You can put in these bigger banks, or you can just look down the list, and it tells you these little colors represent how much it's spent in each year. So I think this is 21, 20, 19, 18, 16, 17, 6. So starting in 2016 here and going, so the little bars will tell you how much money they spent each year. You can see that Chase has spent more money than it did in 2021 than it did in 2020. So did Wells Fargo. So you can sort of look at that visually to see what they're doing. And then you can click on this little plus symbol, and it will tell you more information. You know, are they doing tar sands? Are they doing projects with the Arctic oil? You know, you can get more information by just clicking on that little plus symbol on fossil banks. And that link, again, is also on that website that I created for you. So if you go to my website and you go to the banking section, you'll find it there. The big thing about that Banking on Climate Chaos report is that they're talking about how these banks are funding the expansion of fossil fuels at a time when we need to be dialing back. So we understand that, you know, they're not going to go right away, but we need to be working towards this transition, not making more, putting more money into it. And so they're looking at all these tar sands, Arctic oil and gas, offshore, so on and so forth, all these different things in that. And I'm just going to read this to you. Each dollar that banks put toward new fossil fuel projects and the companies behind them is incompatible with climate stability and their own net zero commitments. So they're saying one thing and doing the other. That's greenwashing. There are a couple groups that are working on this. So Third Act is one of them. It's a nationwide group, and you know, there's a Third Act Sacramento in there. And they're a group of people that have been working tirelessly over the last year or so, educating people about the issue between banks and funding fossil fuel expansion. Also going to talk to the bank managers of the local banks and asking them to understand the problem. And some of them don't even know that it was a problem for their particular bank, talking to the tellers, writing letters to the CEOs. And the whole idea is if we still have these bank accounts, then we can influence them because we are their customers. We can influence them. But in the end, they're saying that if they don't, and it's been over a year they've been working on this, if they don't make a change, then they're going to. If you can go to this, if you're interested, you can go and sign this pledge. If Bank of America, Chase, Citibank, and Wells Fargo are still funding climate-destroying fossil fuel projects in March 2023, that's this month, I pledge to close my account, cut up my credit card. If I don't bank at these institutions now, I pledge I won't do so in the future. And I have to say, a year ago, I went to the Sacramento Third Act meeting, and I was like, oh, wow, that's terrible. But I don't have any of these banks, and I'm okay. And then I pulled out my credit card, and I looked at my credit card. You can do that right now if you want. And what's subsidizing it but Citibank? So So I am in the process of trying to figure out what credit card can I get instead of that one. They are sponsoring a National Day of Action, which is on the 21st of this, 9 days from now, Tuesday the 21st. And there's one it's going to be across the country, but there's going to be one in Sacramento. There's also going to be one in Davis. And this information is on the website for PECA. And Shirley and Lori and Mike and I and Linda, we're all going to go down there. We're going to take the bus and the public transportation and be good citizens of the earth. I also talked to them, and they have this, they sent out a spreadsheet and a Word doc about some of the banks in Sacramento area that they went and talked to, which I found very useful. And some of those same banks are up here in our area. And so I asked if I could link it on our website, and they said yes. So you have access to that too if you go to the banking section and you're looking to change your bank or credit card. And so I posted that on the money site as well. Yep.
What's to say that the people running those projects won't just look somewhere else for their money?
Right.
You know?
Yeah, that's what everyone says. Well, if they're not doing, if they don't do it, someone else will, because it's an opportunity out there to make money.
I would think it's supply and demand. If there's fewer banks that are willing to loan, that means the interest rate is going to go up. And that means it's more expensive for the fossil fuel companies to do business. So I think that's the power of it.
Thank you, Tom. Yeah. And also raises awareness for other people. I mean, I had no idea till I went to this meeting. So I mean, it just takes a few committed, passionate people to sort of draw in the fringes into it to figure out what's going on. There's another group called This Is What We Did. And this is a group of people who want to be able to tell their grandchildren that I did something in this time. And I love this group. They're climate activists, but they're upbeat. So that's always a good thing. And they have a Move Your Money page that's connected with the Third Act. And so they're supporting what Third Act is doing. They have a Move Your Money page. If you go to the page and you scroll down to the bottom, they have lots of resources that'll help you to think about what you can do when you go to move your bank, if you're going to move your bank. They also have these Move Your Money cohorts, which I just completed one of them. This was a 4-week one. You meet once a week with the facilitators who are very friendly, welcoming, upbeat people. And it helps you to talk a little bit about the problem, but also they encourage you to make a commitment each week about what are you going to do this week? And you're going to report back on that next week, because you know how we need that. You know, we can say we're going to do something all we want, but if we commit to something to somebody, then we have to do it. Maybe it's the night before we get back to the meeting, but we do it. So, right? Because it's like a thing. We have this commitment that we've made. And I'd also want to make a call out to their effective climate change conversations, which I did last spring. I did their effective climate change conversations, the same idea. I think it's 3 weeks. You meet for 3 weeks or maybe 4, I can't remember. And you make a commitment to talk to someone about climate change and try to get past your discomfort of doing that, if climate change is your issue, which it may not be. So totally up to you. But anyhow, I recommend this group. So let's hear from NerdWallet and sustainable banking.
Today, we're going to be talking about one segment of ethical banking, which is sustainable banking and the environment. With me today, I have my colleague Spencer Tierney, who works on the banking team and covers social responsibility with banks, as well as B Corps and some other terms that we're going to get into today. All right, so Spencer, can you tell us a little bit about how bank deposits actually work behind the scenes?
Yeah, sure thing. So a bank is a business, and when you open a checking account or savings account, that money that you put in there actually gets used by the bank for funding investments and loans.
Basically, it sounds like your bank can take your money and use it towards projects that you don't necessarily believe in. So what is it that banks are transitioning towards in terms of environmentalism?
Yeah, so it kind of gets to like a question like, what is a sustainable bank, or what is a sustainable banking model? And yeah, it's generally smaller banks that are able to kind of commit themselves, not only just to profit, but what's something that's called like a triple bottom line, which is 3 Ps instead of just profit. So profit, people, and the planet. And with people, it refers to like social impact. So workers, customers, like just and suppliers, just ultimately like how this product or whatever they're making can affect people and the environment. And then there's also the planet, and that's, can go into the supply chain as well as just like, does whatever the company making how does it contribute to the world? And those 3 Ps are helpful in thinking about like, it's not just a question, especially in this day and age, that how a bank can make money off of a loan. It's also, are these loans going to the right place? And so these smaller banks, a lot of them that are very serious about this commitment to the environment and to people actually get certified by a third party. So I only know a few that are like very reputable and that are global and have like a lot of reach. And those are the B Corp, or it's B Lab is the nonprofit behind it. And B Corp or certified B corporations are basically banks and other for-profit businesses that decide that part of their accountability as a business and their transparency will come from, are they making a social and environmental impact in what they're doing and what they're funding? And then another one is the Global Alliance for Banking on Values. This is not as much a certification program that the B Corp is. This is more of an international network of banks, and it's a very small group of banks.
What else can consumers do in order to figure out what different banks are doing?
Look into like the banks in your area that are supporting affordable programs, affordable housing, or like whatever kind of programs you see, especially construction projects, there's usually like a financial backer. If you want to know the list of banks to avoid, or especially if you're an environmentalist, you can actually go into like the Rainforest Action Network has a website. There's banktrack.org. Also just start with your bank. Kind of figure out what is your bank supporting with just its social impact statement. I wouldn't trust just the social impact statement alone unless you can see the third party, any other evidence beside what the bank says can be very helpful.
So Spencer, what are some banks that are currently walking the talk when it comes to environmentalism? Not only their marketing, but also what they're actually appear to be doing behind the scenes.
I would say like Spring Bank, Amalgamated Bank, and these are like smaller banks, but there's some that are nationwide or have like online platforms. So the fintech firm Aspiration and Ando. Also, there are some that are pending B Corp status, which is actually a thing. That's, I think, Climate First Bank in Florida, as well as, I believe, Atmos Financial, and Beneficial State Bank in California is also another one.
I'm a bit more familiar with Aspiration, for example, and I know that they're part of the 1% for the Planet program, which I believe means 1% of their profits goes back towards environmental programs and issues. And then they also don't invest in fossil fuels, and they give you, I believe, carbon offsets for purchasing gas and things like that.
It's not really about perfection. We're not trying to find like the best, the only like the one bank that is doing everything right, because honestly, everything is imperfect in our society and in our world. On that point also, if you are supporting the environment and you're not able to get either one of like the B Corp banks, or you're not able to find, these banks that like either certified or whatnot, your local credit union or community bank, they do a lot of good. And maybe it's not fully explicitly tied to the environment in the same way that a lot of the banks that we've talked about are, but they are still supporting your community. And by supporting the community, usually that means that, especially if they're not a big bank, they're not doing the bad stuff, which is funding the fossil fuel projects or other things that are really detrimental to the environment.
Well, I think it really comes down to people making choices with their dollars that they didn't maybe feel empowered to do before, and having the opportunity to invest with, or put their money with banks who end up investing it into projects that they really personally align with and care about.
This is just another step in our way to support the people and environment. Just knowing that we can actually open a bank account to help people and help the world is just, I don't think it's talked about enough, really.
Several of those banks I mentioned are online only banks. So if you really want to be on one of those banks, it's fully possible if you want to do that. But most people want a bank that they can go to, that a physical brick and mortar one that they can go to. So here in Auburn, we don't have any B Corp or Global Alliance of Banking Values banks here in Auburn. The closest one is Beneficial State Bank, which is in Oakland. So probably your next best option is a credit union. So how many of you have a credit union bank account? Yeah. So it's probably the next best because they're smaller, they're nonprofit, they're beholden to you, who are the customers and owners of the company. They tend to make loans that stay in the community rather than going out to an oil pipeline in Canada or whatever. There's this place called Mighty Deposits, is a woman-owned bank comparison site. So you can go there, type in your town, and it'll tell you every bank that's there, which is nice because a lot of sites will just give you a few of the banks and not all of them. So I went in and I wanted to look at credit unions. So you can find credit unions, you click that, and we have 4 credit unions here in the Auburn area. And what they'll do is they'll say out of every $100 that you deposit, how much of that goes back to the community in the form of investments. So that's one thing they talk about, how much stays actually in Auburn. And then also these are the kinds of things, financing that they do over here on the right side. And then if you want more detail, you just press the more detail button. So you can find out more about that particular bank on there. Some of us, for one reason or another, don't want a credit union. We want a regular bank. And so you can go and you can click the Find Bank button and put in Auburn, California. And we have 12 banks in our area. But if you'll notice, there's this little red thing here, top funder of fossil fuels. So I'm assuming most of you don't want to go there, or if you're there, you want to get out. So those are those ones. The Union Bank, Bank of America, Morgan Chase, and Wells Fargo. And then there's a couple other you can get rid of. That's the Bank of the West, but who owns it? The Bank of Montreal does now. It was formerly owned by BNP Paribas. And they're on that list of 60. The Bank of Montreal is 14th or 15th down on the list of giving money to fossil fuel projects. So US Bank is being bought by Union Bank, and that's why I crossed them out. So it's being bought by the Union Bank, which is MUFG, which is 6th on the list on there. So that leaves these ones.
Thanks. How the heck can you get away from a mortgage with one of these bad banks? I don't have one, thankfully, but
I have no idea. Does anyone know how you can get out of a mortgage? Pay it off as fast as possible or refinance, as Ken mentioned. So anyhow, these are the other ones. And again, it's the same thing. They'll tell you how much money out of every $100 you deposit going back to the community, and then the kinds of things that they lend to. There's another site you can go to where you can put in your information called the Better Banking Options that you can go to. You can put in your town, and what they rated on is building community wealth, serving the underserved, being locally focused and small enough to serve. The problem with I have with really small banks is they tend to get bought by bigger banks. Because I had a lovely bank I loved, Placer Sierra Bank, was in my town, and who bought it? Wells Fargo. So you can put that in and see what that comes up with. 5 different banks that are rated, and some of them are credit unions, some of them is on there. You can do it yourself if that's what you're interested in, but they only give you the ones that that seem to be deserving based on their scorecard. So credit cards, I looked at my credit card. It was a Citi card. You can look at your credit card. Usually on the back of it, it'll tell you, or the front, it'll say who's underwriting that particular credit card. If it's one of those and you want to get out, then if you're already in a credit union, you might want to use a credit union credit card. Or you can do a search for green or socially responsible plus credit card, which I did. And I put a few links on that web page that you can look at if you're interested. And then you should think about, a lot of them are actually debit cards, not credit cards. So if you're trying to build up your credit rating or your credit score, then you don't want a debit card because that doesn't count in that. Debit cards are tied to a bank account, so you'll need a bank account there wherever you get this card. Does it charge an annual fee? Some of them do. Some of them have really high percentage rates, and they could be secured, which means that you have to give them money to hold the card, or they could be unsecured. There. And then the last thing I have to talk about is if you're retired, you may think about what it's going to do to your credit score, because you probably have paid off your mortgage, maybe you've paid off your loan, so you don't have much in your portfolio that they're looking at to give you a credit rating. And so if you take your credit card away, it may affect your credit score. Credit rating, what might happen to that? So sometimes when you close a card, it can affect your credit rating. So first thing you definitely want to do is if you get a new card, don't get rid of your old card right away. Use your new card for a while before you actually get rid of the old card. And so a lot of people are concerned about the reward parts. If anybody's been paying attention to the news, we know who's paying for that. It's not us. It's the people who can least afford it are paying for all these extra benefits that wealthier people can get with their credit cards. So anyhow, but if you're worried about your reward points, just make sure to claim them before you get rid of your card. So if you're someone who cares passionately about social and environmental justice issues, then I urge you to look at what your money is being used for in your investments and by your bank and for your credit cards. So here I am with three of my very long time friends. I've known them all for over 40 years. We went to the Women's March together in Washington, DC. And as you can imagine, there were lots and lots and lots of signs about all kinds of issues there. And this is probably one of my favorite ones. If you don't use your power for positive change, you are indeed part of the problem.